Good morning, everyone, and thank you for joining us on Morning Markets from the team at True Potential. Today we'll look at some of the announcements from yesterday and the potential impact that will have on asset markets. So yesterday brought the first trading day in Europe for 2021. And it was very much a return to the similar themes that we've been discussing in our morning markets videos, and also that which we discussed yesterday in terms of the themes that are likely to impact market sentiment over the coming number of months. So as the day developed yesterday, there was growing speculation that we would see further restriction measures put in place in the UK. We got that firstly from Scotland, with Scotland returning to a full lockdown, very much similar to that which was experienced in March. And then last night we got the announcement from the Prime Minister that England would also be moving into a very similar lockdown to that of earlier in 2020. That in and of itself will have an impact on economic activity. We've seen over the second half of 2020 how the rolling lockdowns and the implications that did have for the services side of the economy. I think the other thing to mention is just a number of other countries globally thinking about and potentially moving to more restrictive measures. We've seen in Japan, in Tokyo, in the Tokyo region, some discussion there of further restrictions. We also see speculation of further restrictions in Germany as well over the coming days. So again, just focusing on COVID-19, rising infection rates, the need to control that at the same time as rolling out of the vaccine and the various vaccines that are available. So those two things working hand in hand to provide a little bit of volatility to the market yesterday. We had seen in the equity market since we had seen markets open relatively strongly over the course of the day, but then they did sell off. So the Euro stocks 50 was up about 0.3% on the day. Look at the FTSE was up 1.7% on the day. Now I think a bit of that is a reflection of the outsized negative move that the FTSE had on the 31st of December, but also some bid activity for NTN, which is the owner of Ladbrokes, which also supported the FTSE 100 yesterday. In the US, moving there, we had the S&P and Nasdaq down about 1.5% on the day. Although they had been slightly worse, they had been about minus 2%, so not closing at their lowest levels on the day. Sovereign bond markets, I think, was quite interesting yesterday. Despite that backdrop that we've discussed, we didn't see very significant changes in the 10-year yield in the US. We did see that coming through more in Europe and also in the UK, where the 10-year gilt is back to trading on 17 or 18 basis points. The US reaction much more muted. I would have expected maybe to see the bond market come in a little bit, and that speaks to one of the points that we discussed yesterday. The focus that there is on the Senate runoff in Georgia, the importance of those two seats. Some of the predicted and sort of the betting markets look to be suggesting there is a potential that the Democrats could win both of those seats. That being the case, we would expect then to see an easier path for some of President-elect Biden's proposals, maybe a larger fiscal stimulus package, but also things on taxation and regulation. That being the case, we would expect that to be sort of more positive from a fiscal stimulus perspective, but then that would be more inflationary as well, and that's just why maybe yesterday we didn't see the same reaction in the US sovereign market as we did in others. The other thing just to touch on yesterday is just commodity markets. With that backdrop that we've touched that a little bit more uncertainty and volatility in the backdrop, we did see precious metals perform quite well. So we saw gold up about 2.3% on the day, trading back at 1,940 an ounce. OPEC Plus, we touched on that yesterday. Very much like last month, the challenges of getting agreement within that OPEC members committee, very difficult, particularly when they're looking at trying to increased supply at a time when we're balancing that with potentially more restrictions, which would curb demand for oil and oil-related products. So that meeting has spilled over into another day, and we'll see what maybe comes from that over the course of today. Just finally then, looking at Asian markets, not a lot of direction really there. We've seen Japan slightly weaker overnight, and that's very much a function of just those comments I made earlier around Tokyo and potential for further restrictions there. China, Hong Kong market slightly better. Some of that is supported by a decision by the New York Stock Exchange not to delist the 3 major Chinese telecom companies from trading there. Very little detail as to why they've reversed that, but if we go back to some of the comments from last year, clearly the Trump administration wanting to make it more difficult for Chinese companies to remain listed in the US, but also to raise capital there. So we'll maybe get some more detail on why they've reversed that decision in the coming days. That's it for today. Please do join us again tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.